Coming up on Market to Market, the impact and the aftermath of flooding in the West. The political wrangling continues over the budget, SNAP, and the Farm Bill. And one entrepreneur combines land and lake in an attempt to catch a profit. Those stories and market analysis with Don Roose next.
This is the Friday, September 20 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Work in Washington remains at an impasse as both sides of the aisle continue to argue about raising the debt ceiling, cutting supplemental nutrition assistance, and creating a conference committee on the Farm Bill. The House voted to cut $40 billion over the next 10 years from the Supplemental Nutrition Assistance Program, formerly known as food stamps. The vote, largely along party lines, cuts SNAP benefits to nearly 4 million people. The president says he will veto the legislation if the measure makes it to his desk. SNAP, which has a budget of nearly $80 billion annually, was split off from the House version of the Farm Bill in July. Also, the House passed a continuing resolution to fund the government until December. And in a move made by the body for the 42nd time, the measure also defunds Obamacare. The Senate adjourned on Thursday without addressing these issues as the clock ticks down to the September 30th deadline when temporary extensions for the Farm Bill expire and the federal government runs out of money. There were no signs as yet that any work was being done to create a House-Senate conference committee to resolve issues with the Farm Bill. Further west, however, more tangible work continues as Colorado residents are sorting out the details following nearly a week of heavy flooding. Farmers and ranchers are already performing the arduous task of assessing property damage and searching for loved ones still missing or unaccounted for.
As the floodwaters subside, farmers and ranchers in Colorado are trying to figure out how much damage was caused by last week's rainstorms. Gushing water swept away barns, silos, and fences, leaving behind mud-covered houses in several communities, including the area just north of Boulder, Colorado. As many were airlifted out of the danger zone to safety, crews continued their search for the more than 200 people that have been unaccounted for or missing for nearly a week. The water was so powerful it uprooted irrigation pipes and spread them around farm fields near Jamestown, Colorado, just north of Boulder. Small lakes have replaced hayfields.
Oh gosh, 5 times more water than I've ever seen here. So.
The heavy rain did bring some relief to the drought-hardened area, recharging soils and reservoirs, which should help farmers well into next year. However, the amount of rain that fell came at a price.
We're lucky. Basically all it did was rearrange everything. It rearranged the equipment we still had here. It flooded the house. We've got a lot of sediment in the sheds and the shop, and just on this little bit of ground here, we got sediment, and it just knocked it all down.
Agriculture is Colorado's third largest industry, worth $8.5 billion annually. The damage done last week is still being revealed, but acres of corn were either heavily damaged or destroyed by the surge of water. On Ron Klein's farm near Johnston, Colorado, the waters pushed a shed and the equipment inside down a road. A semi-trailer truck was turned sideways by the rushing water, and its 700-gallon load of engine oil was swept away.
If you figure where a lot of this came from, had to go through a lot of the cities and industrial areas, and everybody has designated storage areas for their hazardous wastes, and everybody does it according to EPA, and they do it by the book, and even at that, when that much water comes through, nothing's safe. It's all going to get carried off.
In nearby Weld County, where cattle, grains, and produce contribute nearly $1.5 billion to the state's annual agricultural income, farmers are concerned about the potential damage to their crops. There is no word yet on the total amount as officials continue to assess the situation. According to the Drought Monitor, the rains erased huge water deficits in the Centennial State. This week, 64% of Colorado is in some form of drought. That's down nearly 30% from a week ago. Rains across the rest of the country improved conditions slightly, dropping the national average nearly 6 percentage points to 43.1%. Any rain that fell after the cutoff for the drought monitor calculations will recharge parched soil, but will likely have little impact on this year's crop beyond delaying the harvest.
Over the past 3 months, there have been signs of slow, albeit rocky growth in the U.S. economy. According to the Labor Department, the Consumer Price Index increased just 0.1% in August for an annual growth rate of 1.5%. When the volatile food and energy sectors are removed, CPI is only 1.8% higher than a year ago. But members of the Federal Reserve Board are not convinced this and other economic activity is enough to have them reduce their monthly injection of $85 billion into the U.S. economy. Fed officials are predicting just 2% growth this year, down from 2.3% in June, and agreed to continue monthly bond purchases. Stock traders on the New York Stock Exchange and the NASDAQ cheered the move as indices on both exchanges moved higher. While the NASDAQ stayed below record numbers, the Dow Jones Industrial Average and the S&P 500 hit record highs midweek, only to fall back as trading ended on Friday. Like trades in the stock and commodity markets, farming is all about finding the right combination of timing and inputs to turn a profit. Many have searched for the optimum combination of seed and fertilizer or specific animal breeds and feed rations in hopes of finding a money-making combination. One Midwestern entrepreneur has embarked on that search, taking his cue from some centuries-old farming techniques to combine land and lake in one place. Josh Bittner explains.
You may not envision fish tanks on the prairie as the best place to look for added value amidst large agricultural operations. Nevertheless, some folks in America's heartland are giving it a try. Whether it's a hobby developed during the off-season or an entrepreneurial foray into niche markets, sustainable, self-sufficient aquaponics systems are hatching in some unexpected locations. Though history suggests a rudimentary form of aquaponics existed in ancient civilizations, the modern blending of aquaculture and hydroponics has increased steadily since the late 1990s. Industry standards were developed at the University of the Virgin Islands, where the warm climate facilitated large-scale operations. Further north, though, the use of indoor aquaponics as a hedge against extreme summer heat doesn't seem that far-fetched to some. The symbiotic closed-loop method offers the opportunity to turn a small profit by growing crops typically cultivated in other regions of the country.
Aquaponics is popular as a concept now, and it's going to be popular as an industry practice very soon. I would say in the next 20 years, we're going to have a lot of our produce in the Midwest coming from aquaponics.
Higher education has continued research into the science of this hybrid discipline. Promising scenarios have emerged for one-time curiosities to evolve into viable green operations.
Aquaponics is a synergistic relationship between plants and fish. Basically, you feed the fish food. That protein then breaks down into nitrate that can be used by the plants, and the plants strip the nitrate from the water, cleans up the water for the fish, and then the whole cycle continues.
An emphasis on education and conservation are central to the mission of the Leopold Center for Sustainable Agriculture. Located on the campus of Iowa State University, the center seeks to reduce negative environmental impacts associated with farming and develop new revenue streams for producers. Leopold Center funding supports extension outreach efforts like those of fisheries and aquaculture specialist Alan Patillo. He and other instructors educate and advise students and the public on the science, economics, and marketing aspects of sustainable aquaculture.
A lot of people wonder, how do you grow plants in water whenever you can overwater a plant and it starts to die? Well, the reason is we maintain a higher oxygen concentration in the water than you would be able to maintain in the soil. You get very fast growth rates out of the plants, but you also get two products, fish and plants, and the combination of those two can make you more profitable.
All kinds of plants can be grown in this environment, though herbs and leafy greens currently are the most common crop. And for those lured to try their luck raising fish, a certain African species just might be the perfect catch.
Okay, he's a good size.
Right now we're using the Nile tilapia, and that's a very popular species to use for aquaponics. It's very easy to grow. It has a lot of tolerance to poor water quality, which for a beginning fish farmer might be an issue for them.
Oh, who's the TV star today?
Iowa State Extension helps local producers kickstart operations that seek value in the spaces between the traditional monoculture of corn and soybeans. Earl and Jeff Hafner operate early morning harvest near Panora, Iowa. The father-son team says for generations in their family, farming is the only life they've ever known. Firmly rooted in their role as stewards of the land, the Hafners began to incorporate their vision of sustainability over a decade ago.
The whole farm's organic. Small grains, the wheat, the rye, the buckwheat, corn, soybeans, and also the pasture and forage for the cattle, because the cattle's organic. You have to protect the environment. You know, every farmer out here, you know, the soil is his life. You know, the plants and the animals are his life. Anything that destroys the environment would destroy his livelihood or his kids' future's livelihood.
After discovering aquaponics, Hafner helped pass his free time while serving in the military overseas by reading up on the subject. Upon returning to Iowa, he expected to simply start a new hobby.
What intrigued me the most is Grandma was a big gardener. I always liked to garden. However you plant your garden, and as most people know, then you have to go plant your corn and soybeans. You come back 30, 40 days later, and you about know what your garden looks like.
Noting the crucial value of water during his stint in the Middle East validated the importance of conservation to Hafner, and aquaponics presented an opportunity to keep precious resources from going to waste.
What I like about it is technically the only way water leaves this greenhouse is evaporation and transpiration. And that's the sustainable part of it. As water, we're in a drought now. As the world population gets bigger, water is the huge issue. We've been blessed here in the Midwest. We might experience some of how tough it is down in Texas and some of those places.
After receiving a grant from Iowa State to continue his work in aquaponics, Hafner took a hard look at the economics of the endeavor.
If you wanted to raise cattle, you went to the banker and said, I'm going to raise 100 head of cattle. He knew there's industry standards, he knew the numbers. And when I was looking at the numbers, it was tough to find numbers on it. So that's where I said, I'll open my books up. And my first year was rough.
Despite initial hurdles, Early Morning Harvest pressed on, learning from its mistakes. Refining methods over time allowed the Hafners to share their newfound expertise with others.
If you have a CSA and it's a 2/3, 3/4 of a year type operation, you could add a small aquaponics greenhouse to help fill the gap. Maybe keep your labor year-round that way.
The free-flowing exchange of ideas has helped this growing field build momentum. For those dipping their toes into new markets that could be lucrative, Iowa State offers online resources as well. The Agricultural Marketing Resource Center and the National Market Maker site present information on business planning and connecting with buyers.
If you're a small producer, you can find all those people within the community that are interested in getting your product, and they can see you. One of the nice things about aquaponics is that you can start very small and scale it up. Find your customer, find your client that's going to want your product, and as you've seen in this kind of system, you can create extremely high-value products.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
This month's FSA acreage report created a short-term upward move in the markets. However, the potential for a record corn crop pushed the grain market lower. For the week, December wheat lost a nickel while the nearby corn contract moved 8 cents lower. A combination of widely varying harvest reports and the removal of the frost premium pushed the nearby soybean contract 66 cents lower. Nearby meal prices followed suit with a loss of $29.35 per ton. In the softs, December cotton added to last week's rally and gained 6 cents per hundredweight. In the dairy market, October Class 3 milk lost a nickel, while the November contract moved 4 cents lower. Over in livestock, October cattle rallied 70 cents, nearby feeders rose nearly $1, and the October lean hog contract posted a weekly loss of 65 cents. In the financials, the euro gained 240 basis points against the dollar, crude oil rose 67 cents per barrel, and COMEX gold gained $23.75 per ounce. The Goldman Sachs Commodity Index lost nearly 12 points to settle at 639.90. Here now to lend us some of his insight on these and other trends is one of our regular market analysts, Don Roose. Don, welcome back.
Thank you, Mike.
The big market in the broader economic news this week, of course, was the Federal Reserve minutes and the announcement that they're not going to start their taper in September, as a lot of the people in the market had anticipated. What effect is that having, if any, on the commodity markets?
Well, it had a big effect because gold and silver on that day shot up dramatically. Crude oil was up sharply, and what we really had is just a risk-on buying, and it helped support not only the grains but also the meat market. So I think what you really had is the trade in general was looking for a more risk-on type of trade, and so a lot of buying came into the market by the funds.
Now, as we look longer term, since the Fed didn't do it in September, we now don't know when they'll do it. It's probably a few months out, most likely. Is this going to encourage more money to move into equities? Does this maybe create a little bit of risk in commodities going forward with managed money?
Well, I think no doubt. I mean, when interest rates are basically in a zero environment, that people are looking around for alternative investments, and that always brings back buying into the commodity market. And so I think until we actually see the Fed starting to taper back, interest rates start to move up a little bit, I think you're going to have people looking for a risk-on trade, better potential, and it's in the commodity markets also.
All right. Now, the other news we had this week was the FSA acreage report that came out on Monday or Tuesday. Now, that did create some discussion in the markets, but the FSA number doesn't move the markets as much as some people had anticipated. Could you explain the difference between FSA numbers and the USDA numbers?
Yeah, the FSA, you have people that are outside the program, so the FSA number doesn't match up with what NASS comes up with. There's a percentage correlation. And I think if you look at the historical correlations, what it means on the October report, you're probably going to have the corn acres down 1.5, maybe 2.5 million acres. You're probably going to have the soybean acres down 400 to 600,000 acres, and wheat probably 300 to 500,000 acres. That's going to make a difference on the balance table on soybeans. On corn, the increase in yield probably compensates for that, so it really didn't make a big dent in the corn balance table. But what you really had is after those numbers came out and the market continued to push lower. So I think the market's just overbought, Mike.
All right, well, let's talk more specifically about the grains. We did see wheat drop a little bit this week. Is that going to continue? What are your thoughts?
The one thing you have in the wheat market, it's turned out to be the best of the worst right now. You have the world environment is tightened up on wheat to a certain degree. There's a lot of world wheat around. Canada has a big wheat crop. Hard red winter wheat's going to be a little bit on the tighter side, but wheat now has pushed $2 over the corn, and that's probably a limiting factor. So when you look at the wheat market, it probably has upside in that 670, 680 range on Chicago wheat, and probably can anchor down to $6 if the corn market continues to push lower.
All right, and now winter wheat seeding has begun. How is that progressing so far with the drought and with the lack of rains are now turning into rains?
Well, the fortunate thing is we now have some seedings that have really started to pick up favorable conditions from a weather standpoint. Guys haven't seen that for a number of years, so it's a big plus for those guys, and they're enthused. That probably also is going to help cap the hard red winter wheat rallies. And of course, the spring wheat harvest is just wrapping up right now, and a big wheat harvest as we move into Canada.
All right, now as we take a look over at the corn market, we did see that continued slide downward. What is the current trajectory for Deese corn? Are we going to continue sliding?
Well, the corn market on Friday goes home oversold. So I think it's one of these markets that's two steps down, one up. And I think it's a market that wants to technically move down into the support zone, probably 440 to 450, going into the October report where we have a lot of uncertainty with yield and acres. The corn market probably, we're going to have a big balance table. It's going to be a 1.82 billion carryout next year, could grow to 2.5 billion carryout under the right situation. But it's more about the producer. We think with the huge carries that we have in the market between Deese July, about 28 cents, that the producer's going to try and tuck the corn away, and the job of the market's going to be to try and pull it away from him, and maybe the producer does not achieve the carries that he'd like to in the marketplace.
Okay. Now, so for producers out there, and I know a lot of American corn farmers in particular are still very long. We haven't seen a lot of farmers selling. For people concerned about this October report, what's the best way to handle the risk moving into that situation?
Well, you have risk both ways. I mean, with the insurance, with the market now under the insurance, you can be fearful that you could lose some of of your insurance premium, you could buy call options for the upside. We think the upside is very limited, probably 470, 480, but you never know if we get problems in South America, which is probably on the horizon next. So we think to protect yourself, try and take advantage of these carries, buy some window contracts out in July, take advantage of that carry, buy some at-the-money puts, sell some calls over the market, maybe even put some puts below the market. So a window, give yourself 50 cents down, 50 cents up, and protect that carry, I would say, and try and see if you can get a basis improvement.
All right. Now let's take a look at soybeans. That has been the most bullish fundamentals we've seen of most of the markets. Do you expect that to continue? I mean, it's just a tight situation out there in beans?
Yeah, it's a tight situation, but it's a tight situation in the United States. That's the problem. And that's why we actually probably in the United States have the fundamentals are just as tight as they were a year ago. The problem is South America has a huge crop. Canada has a huge canola crop coming at us. So the market is inverted. We have November beans trading about 45, 50 cents over July, but not that crazy inversion that we had last year where November was $2.50 over July. So it just tells you what we're really doing is marking time. The U.S. producer has a 6-month window to sell his soybean crop before we hit South America's harvest that's going to start in February. Without weather problems, they're going to have a huge crop. So for the producer, you know, the job of his market is to market soybeans with the inversion, with a tight basis, and not carry your soybeans into a declining market.
Now, is there any sort of price ranges farmers should really consider selling at, in your opinion, as we look at the beans going into later this fall?
Yeah, November beans, if you look at the November beans lead month, they're very range bound. We think, you know, of course we were down over 60 cents this week. We think $13 on November is good support. Then there's a gap support at 470 or 1272 and then 1240. But the upside target is 1372, and we think it's going to be very hard for the market to take out the double top of 1410. So we think it's kind of range bound. But I tell you, Mike, that is really the wild card on soybeans. Is we're going to have lower acres in October, a lower yield. And if any problems develop in South America, then the soybeans are explosive. So we're counting on South America a lot.
And now you talk to a lot of producers. What are you hearing? Windshield reports, hearsay. What are you anticipating yield to look like for the American soybean crop?
Well, and that's a good question because you're exactly right. We've got all of these numbers from the government, but it's really going to be the tell of the tape is going to be the combines. And so far, you know, the corn, you know, the yields are coming in better than people thought across the belt so far. That can change, but on soybeans, it's really variable. And I think you have to anticipate that soybean yield is probably going to sink a little bit. You know, it needs to stay above 40 bushels an acre if the acres are going to drop 400 to 500,000 acres. So it's going to be, the October report's going to be a big report.
So watch for that number. If we see yield under 40 and the reduction in acres, that's going to be sign for probably a larger move in beans.
I think if both of those would take place, you could probably take out the highs again, along with the fact if South America is having problems. Now, so far, South America is a bit dry in Argentina and Brazil, but the weather forecast as we go into the weekend looks like it's trying to improve.
Okay. Now let's take a look over at the meat markets. As we look at the fat cattle numbers, we did see some strength, as you mentioned, that carryover buying from the Fed report. Where do you see fat cattle headed?
Well, the cattle market, you know, we've been talking about tighter numbers, I think it seems like for years, but it's really been the last 18 months we've talked about tighter numbers coming at us. And remember, a year ago in December, April cattle were 138, and we were anticipating higher numbers. But your real question is where are cattle going? And we think in the fourth quarter it's probably going to be hard to go past 128 to 130 cash. Our production's going to drop 4.6% slaughter numbers in the fourth quarter, and that number's going to continue to stay tight all of next year. Probably the April cattle try, we think that, you know, 134 is going to be a tough number to go past. It's just with these competing meats, you know, is a real issue, particularly poultry is on the increase. So it's not so much about the supply is going to tighten as we go into the rest of the quarter and into next year. It's going to be more about the demand and the competition.
Okay. Now, cattle on feed report did come out today after market close, down 7% from last year. Is that what the market was anticipating?
Yeah, I don't see anything out of that cattle on feed report that's a big surprise. You know, cash cattle traded a bit higher this week. So we think we've socked in a low on cash cattle. The futures market tries to move higher, but it's already got a premium dialed in. But, you know, I think what the cattle on feed report really said is that our numbers are going to tighten as we move forward, and they're going to continue to tighten.
All right, now as we look at the feeder cattle market, we have seen that be a very hot market, both cash and on the mercantile exchange. Where is that headed? How much upside is left in feeders?
Well, the real question mark is, can the fat cattle push up high enough in the deferred months and the corn market go low enough to push the feeder cattle up to new levels? I tell you, when you get feeder cattle up around 160 on the board, I tell you that's a number that is pretty lofty. You're going to have the right things happen. You're going to have the deferred cattle go higher, corn values stay low, and continue to push lower. So I think 160, 165 is a tough mark on cattle. The downside is probably limited also just because the feeder cattle pool is pretty tight.
And this is going to be another market that's going to be affected by that October report. Should yields come in lower than maybe the market's anticipating, or acres get cut even further, potential downside risk there in feeder cattle come October?
Yeah, I think the feeder cattle are very dependent on what happens to the feed value. And of course, then the fat cattle are dependent on that also. So it's that moving matrix that we're going to have to watch very close.
All right. Now, as we take a look over at the pork market, it's been another strongly supported market it's had seemed over the summer. Is that going to continue?
Yeah, the pork market's really been supported by, the fact where are all the hogs at. I mean, we've had, since the first week of August, our slaughter's been down almost 4%. Hard to imagine, so where are all the hogs? That's the question mark. We even had the pork production on a weekly basis 1 week dropped 10% under a year ago. So it's the numbers. We think that, PRRS probably is that effect, but I tell you the big elephant in the room is the PED virus. What's the loss? When's it come at us? We're probably going to find out in the September hog and pig report. But we do think, when you look at the hogs, we think that seasonally the market, the numbers pick up. The weights are going to pick up with the cooler temperatures and the better fresh corn. So we think there's downside potential in the hogs.
All right. Thank you so much, Don. Appreciate you being with us.
Thank you.
And that wraps up this edition of Market to Market. But Don and I will continue our discussion and answer some of your questions in our Market Plus segment on our website. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed and Facebook account exclusively at the Market to Market website. Be sure to join us again next week when we'll examine the legacy of author, feedlot designer, and agricultural advocate Temple Grandin. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.